Today, delighted to speak to Gautam Mukunda from the Harvard Business School. What are the 4 ways to change the financial sector?
Some very simple ones. Too big to fail, right? We talk about too big to fail, and we created this resolution authority that's supposedly able to unwind massive universal banks. I don't know any person not employed by the financial sector who thinks that will actually work. So too big to fail, we need to just say too big to fail is too big to exist. And we need to break up these companies. And I'm talking about somewhere between 6 and 12 companies. This isn't a huge change, right? In fact, antitrust law in the United States up until the 1970s was not primarily oriented in thinking about the effects on consumers, which is how we do it now. It was about power. Theodore Roosevelt, when he launched the first antitrust crusade, said the problem is these companies are so big their power is destructive to the democracy, and that's what we need to take care of. There are a few other things we should do. We should stop subsidizing debt in the corporate tax code, right? So we make interest payments on debt tax deductible, but we don't do that for dividends. So we're essentially subsidizing debt at the expense of equity. There's no reason to incentivize companies to put themselves in debt. If anything, we should be going the opposite direction, right? That's the worst thing we could do. So if we removed the debt, if we removed the tax deductibility of debt, and again did that in terms of a wholesale restructuring of corporate taxation in the United States, that would be huge progress. A Tobin tax on financial transactions would dampen volatility in the markets, and a very relatively small one would have no effect on real liquidity. Right, so Michael Lewis wrote this book about high-frequency trading, which has had a lot of traction. You can agree or disagree with Michael Lewis's take on the HFT, but the standard argument that people who are in favor of HFT make is that it provides liquidity to the markets. That is precisely wrong. The thing with HFT, right, is it provides liquidity when the markets are already liquid. So it's liquidity when you don't need it. So a Tobin tax on financial transactions would both take care of this problem and would incentivize long-term investing. Right? So if we just did those things, that would be all by itself, that would be huge. The other thing we do is that in the United States we massively subsidize capital gains at the expense of ordinary income. Right? We tax long-term capital gains at a much lower rate than we tax ordinary income. So the argument for this is that supposedly this incentivizes investment and increases long-term economic growth. The problem is that when we look at this statistically, there is no empirical evidence that cutting capital gains taxes increases economic growth. It just doesn't show up in the numbers. If we do that, I don't see any particular reason that we should privilege Warren Buffett's form of income over that of a doctor or a soldier or a scientist. I think Warren Buffett is great, but I don't think the US government should be favoring him over anybody else, and frankly, of course, he doesn't think that either. So changing that part of the tax code would again do a great deal because, of course, the people in the financial sector derive some of their power and prestige from their enormous sums of wealth, and we're giving them essentially a big extra increment to their wealth by not taxing it when we tax everyone else. Even if we did just those 4 things, that would make a huge difference.